A question we get asked quite a lot on social media and in consultations is, what is a switcher mortgage? That's a pretty good question. A switcher mortgage is exactly what it sounds like. It is when you move your mortgage to a different lender, a different provider, because they're offering better rates or they're prepared to lend you more money, or any number of reasons. So why would you switch your mortgage? Well, the main reason most people do is for cost savings. You can get a lower rate elsewhere with a different lender if you move your mortgage from your existing bank. In Ireland in particular, the high street banks have dominated the mortgage market and have a huge market share, but they are also the most expensive places to have your mortgage. So after a number of years, people maybe look around, they see that other lenders are offering better rates, or they talk to their broker, they talk to a financial advisor who says you are paying more for your mortgage than you need to, and so you go and switch your mortgage and make what could be considerable savings. For a lot of people, it's hundreds of euros a month and tens of thousands of euros over the lifetime of your mortgage. Don't forget, this is something that you're paying every month for 10, 15, 20, 30 years. So any sort of a saving every month really starts to add up. So how do you switch your mortgage? Well, essentially, switching your mortgage is making a brand new application to the lender that you want to switch to. You need to fulfill all the criteria the same way as you did beforehand. So your income, your repayment capacity needs to be there. You avoid needing a deposit on the house because you're not buying a new house. You make the mortgage application, and they will generally when they grant you approval, say this is on the basis that when we give you this mortgage, it is used to pay down your existing mortgage. So they don't let you simply have two mortgages outstanding on the same property. They will give you a second one, but only on the provision that you will pay down the outstanding mortgage, the first mortgage. Because of that, you do need a solicitor. You do use a solicitor, again, the same way as when you were buying the house. But in general, a solicitor's fees for a switcher mortgage will be much less than when you were going to buy the house in the first place, because there isn't nearly as much work in terms of researching title deeds and all these sorts of things. It is simply to do with the mortgage contract. Because there are costs involved, like legal fees, as your house valuation is another one, which is about 150 euros. Because there are those costs for a switcher mortgage, most lenders will offer you a cashback sum to cover those costs. So it might be 1,500 euros, it might be 3,000 euros. Every lender differs a little bit, but in general they offer to cover that, to give you some cash back, which is designed to cover those costs involved in switching your mortgage. In Ireland, interest rates charged on mortgages have been trending down for the last 10 years. So if you were lucky enough to say have a tracker mortgage from back pre-2010, you're probably on a very low rate mortgage that won't be beaten. But if you have taken out your mortgage since 2010, you are more than likely on a variable rate at this point, which is quite high. There will be savings out there for you if you switch a lender, particularly to a fixed rate, but even to a lower variable rate mortgage. And these savings can add up to tens of thousands of euros. In a lot of cases, what we would recommend is that if you switch your mortgage to a cheaper option with a new lender, you maintain the mortgage payments that you've been making every month. That means you will clear your mortgage earlier, and by clearing your mortgage even 1 or 2 years earlier, that could be 10, 20, 30,000 euros of a saving for you. If switching mortgages sounds like something you would like to explore, like to look at, either for you or maybe for your parents or other family members, we do offer a free mortgage review service, which is a 15-minute phone call. We'll get the basics of your financial situation, of your current mortgage, and we'll be able to tell you if the savings out there, if you will be eligible to switch mortgage, and how you can go about it. Check out our website. You can give us an email, phone call, or you can book an appointment online. And as I say, the service is free of charge. So why not see if you can save what could be an awful lot of money for you and your family?